Welcome to Protect Your Assets Market Briefing. I'm your host, David Hollander, also known as the Sandman. Now let's get started. Dow was off this week 2.7%, S&P off 2.4%, NASDAQ off 2.5%, the international index off slightly at 0.7%, 10-year Treasury holding in right at 4.06%, and oil, another tough week for oil, down 3.4%, closing at below $60 a barrel at 58.83. So there are a few reasons to suggest that this bump could represent the start of a more volatile October as we approach the remaining part of the month. First, we're entering the period of the year when volatility is typically higher. Looking back over the past 40 years, the volatility of daily returns, well, it's just higher in October than any other month. This historical pattern is not guaranteed to be replicated this year, but it does point to some seasonal risk around markets, and we just saw that this week. Second, this risk could be exacerbated by, of course, the government shutdown, any more political or economic news that were to come out, a prolonged shutdown, more trade policy headlines, or surprise economic data, and of course the more cautious Fed could all shift the market sentiment. And third, and finally, with equity markets near all-time highs still, and all valuations fairly elevated, there could be a pretty good risk of a reassessment of the fundamentals and profit taking as we move to the closer part of the end of the year for people taking their tax thoughts in mind, which we're doing right now. So all those things, well, those could just drive markets lower. So where was the shining spot this week? Well, gold. Gold shined the brightest this past week. Perhaps the most striking reality of the uncertainty has been the gold market. Prices moved above $4,000 an ounce this past week, up from $2,660 at the start of 2025. So trying to get your mind around the precise drivers of this approximate 50% increase in gold, well, it's fairly challenging. If you look at the economics, they often look at the trend in real interest rates as a driver of prices, i.e. when rates go higher, typically that's bad for gold. And if you have rates going lower, well, that's typically good for gold. But if you look at that this year, that really hasn't been the case, because rates just recently went down one time this past meeting. It was a quarter point. It wasn't anything significant. So why has the price moved so much since the beginning of the year? Well, is it central banks? Are central banks shifting to a gold reserve accumulation? Well, I don't think so. If you look at the amount, it's just not large or fast enough to prompt such a large repricing, in my view. Finally, the case for gold rallying as part of a safe haven flow against near-term downside risks, well, that would seem to clash with the stock market prices and values trading right now at all-time highs. So that leaves the concern over rising government indebtedness and, of course, increased political pressure on central banks. If we look at the amount of U.S. debt held by the public, well, it's set to become larger than annual GDP by the end of this year, and markets might see the political gridlock right now as evidence that the tough political compromises likely to needed to address these issues may be tough to find. So this is not just a U.S. issue with debt high and rising across many other developed markets. We're seeing these sort of patterns play out around the world, and that could just be driving these prices higher. Meanwhile, you look at the political pressure on the Fed right now to lower interest rates, threats to fire Fed board members, and uncertainty over new appointments. Well, this could be undermining the confidence around the independence of the central bank and encouraging a greater allocation to long-term stores of value like gold. It's hard to understand the extent of the concern and the impact on gold. So given the strength of the rally up to this point, I think you should be cautious about chasing prices right now. If you're considering exposure to an asset class like this, well, consider a basket of broad-based commodities. That could offer you a little bit more balanced approach as you look at that. Also, keep in mind that volatility right now, it's normal this part of the year, and we typically see at least 3 to 4 dips of between 5 to 10% each year on average. So this could present an opportunity for you to enter markets at a better value, better price, or take some profits like some people are starting to do off the table and buy those areas maybe you're not invested in. I'm going to switch here to our crypto monthly discussion, so maybe you think about that a little bit. But overall, I still remain optimistic about the outlook for the growth and corporate profits next year in 2026. I think this will continue to be helped by easing of interest rates, certainly maybe some stability in the trade policy again. The tax cuts, as we know, are permanent now with the big, beautiful bill. This will only help households and businesses. And so I think investors should keep your focus on long-term horizon and speak with your advisor right now about ways to protect your principal in volatile markets. What sort of things are out there right now that maybe you don't have exposure to, like alternatives or fixed indexed annuities, certainly life insurance for tax-free benefits. All these are going to be very important as we move into the volatility that could be ahead of us now. Now let's switch to the monthly update on Bitcoin. Bitcoin, again, hit some milestones. The industry advances that we saw. Global payment network SWIFT. They're going to build a blockchain-based ledger with JP Morgan, HSBC, and some other global banks. And this is going to enable real-time cross-border payments in digital asset transactions. Morgan Stanley's E-Trade, well, they're going to launch a crypto trading in 2026. The CBOE Index, CME Group, Gemini, Kraken, FalconX, and Prime XBT, well, they announced expansion of their derivatives businesses. We also saw PayPal. PayPal said that they have over 400 million active accounts. They're going to add cryptocurrency to their peer-to-peer payment. You may know the PayPal link. This will enable you to send and receive digital assets directly. And Robinhood, well, they were added to the S&P 500 index on September 22nd. How about some ETF news out there? Well, the SEC approved generic listing standards for spot crypto ETFs. This removes the need for lengthy case-by-case approvals, meaning faster launches across more crypto. Vanguard is reportedly weighing in on whether they're going to let their brokerage clients access third-party crypto ETFs. This would reverse its long-held position of rejecting crypto products. New launches, Grayscale CoinDesk Crypto 5 ETF. There's a Grayscale Ethereum covered call. Defiance came out with a leveraged long income Ethereum ETF. So you're just seeing, again, these folks who participate in the world of crypto going more exponentially out there. So that you be very careful with those sort of things. Multiple issuers have also filed or saw proposals advanced for a variety of crypto ETFs, including BlackRock, Grayscale, and the SEC approved options tied to the CBOE Bitcoin US ETF index. So those are some notable ETF news out there. Stablecoin progress. Well, the stablecoin market cap topped, get this, $300 billion for the first time on Coin Market Cap. Citibank projected the stablecoin market could reach $4 trillion by 2030. And companies that announced plans to launch stablecoins, well, ING, UniCredit, HSBC, Commerce Bank of China, and other companies that made various moves in the stablecoin ecosystem, Google, Coinbase, Salesforce, American Express, Visa, MoneyGram, Societe Generale, Deutsche Börse, and Tether. Some important regulatory moves we saw. Patrick Witt, the executive director of the White House Council of Advisors on Digital Assets, well, expects a sweeping crypto market structure bill to pass before the end of this year. SEC Chair Paul Atkins confirmed that by year end, the agency intends to roll out an innovation exemption designed to let crypto firms bring new products to market without having to comply with previous regulatory requirements. Mr. Atkins also reiterated that crypto's time has come, underlying the urgency for clear policy framework and U.S. leadership in the space. So other international headway, we saw the EU, UK, Australia, Japan, South Korea, Hong Kong, all taking steps towards backing advanced digital assets and blockchain technology. So there's your update on the crypto space.
You can hear the Protect Your Assets market briefing on your favorite podcast app or as an Alexa flash briefing. Just search for Protect Your Assets market briefing. Links to subscribe free wherever you listen are at libertygroupllc.com/PYA briefing. The following program is paid for by Liberty Group, and the views and opinions of the host do not represent those of the station or its ownership. Investment advisory services are offered through Liberty Wealth Management, an SEC-registered investment advisor. Legal information provided on the air is not intended to be a substitute for callers hiring their own lawyers to advise them about personal legal matters. The information provided is general financial comment and cannot be relied upon for your specific financial situation. Investing involves risks, including the risk of loss of your investment. Please consult with a financial professional before investing. California Life Agent number 0B48569. You're listening to the Protect Your Assets Radio Network.